You know, we've gotten a lot of commentary, obviously, throughout this day and the prior days on how bad is the selling going to be? Is this the big correction? Are you going to get an even deeper flush? And at moments today, it certainly has had that kind of feel to it. And maybe that's what you're on the cusp of as we see the markets deteriorate as our show begins today. You know, one of the voices that was on the network today was Professor Jeremy Siegel of the Wharton School, who tried to answer the question of how much more selling do we need to endure. Let's listen.
I certainly wouldn't be surprised NASDAQ to go into bear market territory. And the S&P, because it is top heavy with tech, probably go into deep correction territory. As you know, I've been saying that inflation is much worse than the Fed admits. Even now that they're way behind the curve, they've got to catch up.
I mean, Bryn, you've suggested that the market is doing the Fed's bidding in some sense, but the professor, and look, we're down about 17% from the highs on the NASDAQ. So, you know, bear market, okay, so do we have a few more percentage points to go? Oftentimes, as all of you know, as well as everybody else, you have a tendency to overcorrect to the downside, right? I mean, the elevator down is a lot faster than it is on the way up. Is that the kind of environment we're in? Is the professor right? And he's been pretty much beating that drum that the Fed is going to have to be much more aggressive than people think because inflation is much worse than the Fed believes.
Yeah, well, two things, Scott. You know, as we all know, markets ride up an escalator but come down, to your point, on an elevator. A lot of these high growth names probably don't get out of that elevator and flatline, but there will be definitely some ones that come out like it did in the tech bubble bursting. I will say on inflation, I think it's really important. You know, CPI measures rate of change. And so if energy was 60 last year and energy is 80 this year, that's a 25% rate of change that goes into the CPI number. But as energy, just to stick with that, goes from 80 to 80, that delta isn't there anymore. And so I think that the rate of change of inflation will actually start to come down. But the absolute level of inflation, if you raise someone wage, if Starbucks went from $15 to $20 an hour, that's not coming down, right? And so I think that we will see CPI, that rate of change, come down, but the absolute level will stay higher. So I agree with Professor Siegel, but I don't think the market's really realizing that rate of change should come down in the second half of the year, which I think should help the Fed not be so hawkish that the market's pricing in today that they will be.